In late 2026, Euro 7 emission standards arrive for new cars. Insurance companies are pushing telematics harder than ever. Cities across Europe are tightening access restrictions, and manufacturers are desperately pivoting to subscription services. When these forces converge, something unprecedented happens. Owning a simple, older car becomes the smartest financial decision you can make. I'm not talking about classics. I'm talking about regular 15 to 20-year-old cars that suddenly become more practical than brand new ones. Smart buyers are already positioning themselves because what's coming isn't speculation. It's documented regulatory reality that changes everything. What I'm about to show you is based on published EU regulations, insurance industry trends, and manufacturer strategies that are already in motion. Late 2026 and into 2027 mark the convergence of multiple changes that will fundamentally alter the economics of car ownership. The auto industry sees this coming. Used car dealers are adjusting inventory, mechanics are advising customers differently, and savvy buyers? They're quietly securing good examples of reliable older cars before prices adjust to new market reality. I've compiled this from official EU regulatory documents, insurance industry reports, and manufacturer announcements. No conspiracy theories, no speculation, just documented changes that will either validate your decision to keep an older car or convince you to buy one before it's too late. If you want to understand how 2026 to 2027 will reshape car ownership, hit that subscribe button and ring the notification bell, because this information affects every car buying decision from now forward. Euro 7 emission standards begin implementation for new type approvals in late 2026, with all new cars covered by late 2027. This isn't just another emissions update, it fundamentally changes what's required in every new car. The regulation mandates onboard monitoring or OBM systems that continuously track emissions performance, not just during annual tests, constantly. Every sensor, every component, every system must self-report its status. When something fails, the car must alert authorities during its next inspection. Independent studies estimate Euro 7 compliance adds between 180 to 2,000 euros per vehicle, depending on methodology. Frontier economics puts passenger cars at the lower end, but that's still real money on already expensive vehicles. More importantly, it adds complexity that will cost owners later. The OBM system requires sophisticated sensors and diagnostic capabilities. When these fail, and sensors always fail eventually, replacement costs will be significant. A Lambda sensor that costs 100 euros today becomes a 500 euro integrated monitoring module tomorrow. Multiply that across every emissions-related component. But here's the crucial point. Pre-2027 cars don't need any of this. They continue with existing standards. No continuous monitoring, no self-reporting, no additional complexity. Your 2010 Golf remains simpler and cheaper to maintain than a 2027 Golf forever. While there's no coordinated January 2026 switch, insurance companies across Europe are independently pushing telematics-based policies aggressively. The trend is clear. Traditional insurance is becoming more expensive, while monitored insurance offers discounts with massive catches. Telematics policies track everything: speed, acceleration, braking, location, time of day. Safe driving gets discounts, but their definition of safe is extreme. Accelerating normally on motorways? Penalty. Driving after 10 p.m.? Penalty. Parking in statistically risky postcodes? Penalty. Under GDPR, this monitoring requires consent. You can refuse, but insurers are making non-monitored policies increasingly expensive. Some companies are quoting between 50 and 100% higher premiums for identical coverage if you refuse tracking. It's voluntary in theory, coercive in practice. Here's where older cars have an advantage. Many insurers offer classic or limited mileage policies for cars over 15 to 20 years old. These policies assume careful ownership and limited use, resulting in lower premiums without monitoring. A 2008 BMW might qualify for 400 euros annual classic coverage, while a 2024 BMW costs 2,000 euros with monitoring or 3,000 without. The insurance industry knows older car owners maintain their vehicles better and drive more carefully. Their actuarial data proves it. They're pricing accordingly, creating a paradox where insuring older cars becomes cheaper than newer ones. Cities across Europe are implementing increasingly complex access restrictions, but not in the way that many expect. Each city has different rules, different timelines, different exemptions, creating a patchwork that accidentally favors certain older cars. Brussels' low-emission zone gets stricter each year, but vehicles over 30 years old can apply for historic status exemption. Germany's environmental zones ban older diesels, but cars over 30 years old can get H plates with easier access. France's Critère system restricts by age and emissions, but collection vehicles over 30 years old get exemptions. The key number isn't 20 years, it's 30 for most European cities, 40 for UK historic status. But here's what's interesting. Cars from the mid-1990s are entering this window now. A 1996 Mercedes W210 becomes historically eligible in 2026. These aren't ancient cars. They have airbags, ABS, modern safety features, but avoid modern restrictions. The perverse outcome? In many cities, a well-maintained 1995 BMW 5 Series will have better access than a 2015 diesel 5 Series. Not because it's cleaner, but because it's old enough to be considered historic rather than just old. The regulations create backwards incentives. Cities know this but can't fix it without eliminating historic exemptions entirely, which would anger powerful classic car lobbies. So the loophole remains, and smart buyers are positioning for it. While no EU law mandates subscription features, manufacturers are voluntarily moving towards this model aggressively. BMW's heated seat subscriptions made headlines, but that's just the beginning. Mercedes, Audi, Tesla, they're all implementing features as a service. The technology already exists in most 2020 plus cars. Heated seats, heated steering wheels, adaptive cruise control, performance modes, all software locked awaiting payment. The hardware is there, you paid for it, but can't use it without monthly fees. BMW charges €17 per month for heated seats in some markets. Mercedes wants €59 per month for rear-wheel steering. Tesla demands €199 per month for full self-driving that isn't actually self-driving. Calculated over typical ownership, these subscriptions add thousands to actual cost. But pre-2020 cars? Everything works permanently. That 2010 Mercedes has real heated seat switches that work forever. The 2008 BMW's features are hardware-based, no software locks possible. Once bought, always owned. This permanent functionality becomes increasingly valuable as subscription models spread. The EU's updated General Safety Regulation, or GSR, does mandate certain safety features from July 2024. Intelligent speed assistance, driver drowsiness detection, data recording, but these are requirements, not subscriptions. However, manufacturers are using these mandates as excuses to add connectivity and control systems, enabling future monetization. The diesel situation in 2026 to 2027 becomes particularly complex. Cities aren't coordinating bans, but many are independently implementing restrictions. Paris restricts Critère 3, Euro 4, and worse. Stuttgart bans Euro 5 diesels from the environmental zone. Amsterdam is progressively tightening standards, but the timelines vary wildly. Madrid's not implementing until 2025. Rome keeps delaying. Berlin's restrictions face legal challenges. There's no synchronized 2026 diesel apocalypse, just a gradual tightening that affects different cars differently. The paradox emerges with historic vehicles. A 30-year-old diesel, 1996 or older in 2026, can potentially get historic exemptions in many cities. Meanwhile, a 2015 Euro 6 diesel faces increasing restrictions. The older, technically dirtier car has better access than the newer, cleaner one. This isn't coordinated policy. It's the unintended consequence of overlapping regulations. Environmental zones target old diesels, 5 to 20 years, while historic exemptions protect very old diesels, 30 plus years. The gap creates opportunity for those who understand it. Diesel owners are responding predictably. Clean, low-mileage examples of reliable 1990s diesels, Mercedes W124, BMW E34, VW T4, are seeing price increases, not as classics, but as future historic exempt daily drivers. While there's no blanket 15 years parts cutoff in EU law, the reality of parts availability is changing dramatically. Manufacturers typically support models for 10 to 15 years after production ends, then gradually withdraw. By 2026 to 2027, everything from 2011 to 2012 and earlier enters the aftermarket-only zone. But here's the positive twist. The aftermarket for popular 2000 to 2010 cars is exploding. Not just Chinese copies, quality reproductions using original specifications. Bosch, Febi, Lemforder, and others are expanding catalogs for older cars because demand is growing, not shrinking. The contrast with newer cars is stark. Post-2020 vehicles increasingly use serialized parts requiring dealer programming. A headlight isn't just a headlight, it's a networked component requiring software authorization. Even if aftermarket parts become available, installation requires proprietary tools. The EU's repair and maintenance regulations ensure independent garage access to technical information, but manufacturers are making this access expensive and complex. One independent shop owner told me, I can fix anything up to about 2015 economically. After that, the diagnostic equipment investment doesn't make sense. This creates a sweet spot. Cars from roughly 2005 to 2015 that are new enough for safety and comfort, but old enough for affordable independent maintenance. These cars will remain economically repairable far longer than newer vehicles. The Consumer Credit Directive updates don't mandate bundling all costs into monthly payments, but they do require clearer disclosure of credit costs. This transparency is revealing uncomfortable truths about new car ownership. When financing costs, insurance requirements, and rapid depreciation are clearly disclosed, the true cost of new car ownership becomes undeniable. A €40,000 car financed over 5 years doesn't cost €40,000. It costs €55,000 plus including interest, higher insurance, and massive depreciation. Compare this to buying a €5,000 older car outright. No finance charges, lower insurance, minimal depreciation, possibly appreciation for the right models. Annual maintenance might be €1,500, but that's still less than 3 months of new car payments. The market is responding to this reality. Used car prices for reliable 10 to 20-year-old models have increased 20 to 40% in the past 2 years. Not classics, just solid, repairable transportation. A clean 2008 Honda Accord that sold for €3,000 in 2020 now fetches €5,000, still cheaper than 1 year of new car payments. Banks see this trend. Classic car finance is growing while new car finance applications decline. They're following the market, and the market is choosing older cars for sound financial reasons. Manufacturers aren't halting developments, but they are adjusting strategies. The push towards EVs, subscriptions, and premium segments shows they're abandoning the affordable market. When the cheapest new car costs €15,000 plus, millions of buyers are excluded. Some manufacturers are exploring certified pre-owned programs for older models, recognizing that their 10 to 15-year-old products might be more appealing than their new ones for certain buyers. It's not heritage leasing, but it's acknowledgement that older, simpler cars have value. The complexity addiction is showing cracks. BMW has walked back some digital-only controls after customer backlash. Mercedes is reintroducing physical switches in newer models. They're learning that customers want technology that helps, not technology that dominates. But they can't fully reverse course. The development cycles, regulatory requirements, and infrastructure investments lock them into complexity. They can't build simple cars anymore even if they wanted to. The entire system prevents it. Chinese manufacturers see opportunity here, but EU regulations affect them equally. Any new car sold in Europe must meet all requirements. Euro 7, GSR safety mandates, cybersecurity rules. They can't offer simple alternatives either. The regulatory framework ensures complexity for all new vehicles. Based on these converging factors, the optimal strategy becomes clear. Secure a reliable car from roughly 2005 to 2015 before market dynamics shift further. These vehicles offer the best combination of reliability, repairability, and regulatory positioning. The specific models being targeted by savvy buyers are predictable: Toyota Corolla or Avensis 2005 to 2015, Honda Accord or Civic 2006 to 2015, Mazda 3 or 6 2005 to 2015, and specific BMW, Mercedes, and Volkswagen models known for reliability. These aren't investments, they're practical transportation that avoids modern pitfalls. For those needing newer features, 2015 to 2019 models offer modern safety and comfort while avoiding the worst of subscription services and excessive complexity. They're new enough to feel contemporary but old enough to escape the worst modern automotive trends. The key is buying based on condition, not age. A well-maintained 2008 model with service history beats a neglected 2018 model. The older car might actually last longer and cost less to run. This inverts traditional car buying logic, but the data supports it. The changes coming in 2026 to 2027 aren't apocalyptic, but they are significant. Euro 7 adds cost and complexity to new cars. Insurance pricing pushes towards surveillance or higher premiums. Cities create access puzzles that accidentally favor certain older cars. Manufacturers push subscriptions and complexity that nobody asked for. Combined, these forces make older cars increasingly attractive, not as classics or hobbies, but as practical daily transportation. The sweet spot of reliable, repairable, regulation-friendly vehicles from roughly 2005 to 2015 offers an escape from modern automotive frustrations. This isn't about rejecting progress, it's about rejecting unnecessary complexity, surveillance, and extraction. When a 2010 Honda Civic offers better value than a 2025 Honda Civic for many users, the market has revealed something important. The automotive industry built complexity expecting consumers to follow. Instead, consumers are choosing simplicity. The 2026 to 2027 regulatory and market changes will accelerate this trend, creating opportunities for those who understand it. Your older car isn't just transportation. It's freedom from subscriptions, independence from surveillance, and escape from unnecessary complexity. In an automotive market trending towards control and extraction, choosing simplicity becomes revolutionary. And that revolution is already underway. What's your strategy for navigating these changes? Are you keeping your current car, buying older, or accepting modern complexity? Share your thoughts below, because this community is writing the new rules for automotive ownership.